News 24 is reporting that South Africa's government is in talks with the World Bank to secure additional funding. It says the state is seeking around 12.5 billion rand as it considers ways that it can fund the likely extension of the COVID-19 social relief grant that's scheduled to expire in March. Last week, that was on Friday, the International Financial Institution approved an 11.4 billion rand loan to South Africa. Let's talk more about this with economist Duma Kobule. Duma, very good evening to you. Thank you so much for being on News at Prime as always. Is government looking in the right places for financial assistance?
Mbegile, this story doesn't add up for me. One way of making sense of it is that the original application announced by the President in April 2020, he implied that they're asking for $1.8 billion. The loan that we got a few weeks ago was about half of that. So this could be the other half of that. But it still doesn't add up because 12.5 billion rands will not pay for the extension of the social relief of distress grant. The grant, apparently there's about 10.5 million people getting this grant every month, and it will definitely be extended in the budget next month. That will be at a cost of 44 billion rands. So 12 billion rand is not even a third of the 44 billion rands cost of extending the social relief of distress grant.
You said the grant will definitely be extended in the budget in February, but just 2 days ago we're reading again in print media that the Economic Advisory Council that advises President Ramaphosa has advised against that, warning of serious economic implications if government goes ahead with the implementation, in fact, of a permanent basic income grant. How then do we read the two developments together?
Well, Tabakile, I just have to mention there's been a lot of drama since that report was released. There's been a lot of, apparently within the panel, a lot of witch hunting to find out who leaked it. Today in the presidency released a statement trying to clarify that the people who had released that report had been selectively quoting from a report that was done in September. The report in September had two parallel views, and where the panelists took different opposing views. There were people who supported the basic income grant, and there were people who didn't support it. Now, the majority of the people who didn't support it, I think they were just fear-mongering. It was a last-ditch, desperate attempt to sort of influence the president. About 2 weeks ago, I was given an audience as part of a group of civil society with the president and the Minister of Finance and the Minister of Social Development. And there's been 12 reports from civil society looking at this thing from a different perspective, that if the grant is not, we have to implement the grant according to these 12 reports. And the latest one dropped yesterday from NEDLAC, and previously the big expert panel from Department of Social Development. So there's no shortage of reports that show how this thing can be implemented.
But do you believe then, Duma, given how divided opinion is on the issue of a permanent basic income grant, and even the whispers in the president's ear and in other sectors around business and the rest of it, do you believe then, given that context, government will have the guts to go with a permanent basic income grant, or kick the can further down the road by extending the relief grant, that 350 rand, which would be more of a temporary intervention?
I think what I'm hearing is that they're going to kick the can down the road, and they have a year to decide and to consider all the debates around the basic income grant. But I think there's been a solid case for the grant from so many reports, and people have come at it from different angles and showed. I think there's no excuse for the government not to implement the basic income grant here.
So this loan then, whether what we're reading today from Fin24 and Bloomberg is part of a full application related to that first tranche of money released last week, would be in dollars, a sum of $800 million US, right? It's Treasury has told Bloomberg and News 24 that this would be a low interest loan, same language used a week ago. But does the fact that it would be in dollars raise any flags? Could it worsen our fiscal position?
Yes, okay, now let's just remember we're in a fortunate position, unlike other developing countries, of having 90% of our debt denominated in our local currency. And if you look at the last 4 decades, every single emerging market crisis has been because of accumulation of foreign currency debts. This was from Mexico in 1982 to Argentina last year. So every single country has, so it's called the original sin in borrowing in foreign currency. And I don't think South Africa, 12 billion rands, that is what South Africa borrows every week on the local market. We've got deep capital markets in South Africa. Our banks and non-financial institutions, they've got assets of about 17 trillion, and we've got the PIC with massive assets that can lend to the government on favorable terms. We've got our central bank, and we saw in the crisis that central banks provided massive financing to their governments across the world. So there are so many options for us to be raising domestic finance to get our economy growing. Because we must remember that the forecasts for our growth over the next 5 years are bleak. We had a lost decade between 2009 and 2019 when the economy didn't grow. And the forecast from the IMF says between 2022 and 2026, our economy will grow at about 1.5% a year. And that will result in increased unemployment, poverty, and inequality.
Tuma Kubule, economist, good to speak to you. Thank you, Tuma.
Thanks.